Hi, I'm Max Keiser. This is the Keiser Report. You know, it was the best of times. It was the worst of times. Stacy.
That sounds like the opening lines to A Tale of Two Cities by Charles Dickens. And he was somebody quite useful and relevant to this age because he was writing during the beginning of the end of the British Empire and also during the explosion of the rentier class. A lot of what he wrote about is the disaster capitalism caused by the rentier class. So we're in a very similar time to that, with this pandemic meeting the over-leveraged fake fiat system that we have and the chaos that it's causing. And just for those of you out there who are, perhaps like myself, perhaps too busy reading Twitter all the time and not enough time to devote to reading A Tale of Two Cities, I want to read the rest of that quote from the opening of A Tale of Two Cities, because it's quite relevant, I think, to our time, because that book was written in the period leading up to the French Revolution and then through the Reign of Terror, which I think is similar to what we have today. It was the best of times. It was the worst of times. It was the age of wisdom. It was the age of foolishness. It was the epoch of belief. It was the epoch of incredulity. It was the season of light. It was the season of darkness. It was the spring of hope. It was the winter of despair. We had everything before us. We had nothing before us.
Well done. Charles Dickens captured the zeitgeist at that moment, didn't he? Christmas Carol being a condemnation of capitalism, wasn't it?
Yes.
The ghost of Christmas future was neoliberalism visiting upon the present to try to warn people what happens when you financialize the global economy and you do 300 or 400 years worth of consumption today, Christmas being a holiday of consumption, right? Losing its significance as a spiritual, soulful occasion. And here we are. We've all been very, very naughty, and we've all been sent to our room. And we're all sitting in our rooms now thinking about what we did. This is a moment of self-reflection for the global community to sit in your room and think about what you've done, because you've been very, very naughty.
And there's a sort of sense that, yes, it is bad on the way to something better. Okay, yes, for example, the revolution in France and the Reign of Terror were not pleasant events in themselves, but at the end of the day, they led to a republic and a wealth and income gap that declined rapidly, and a flourishing of the ordinary person. The same here. What we're seeing is the end of a financial system, a debt-based system, a fiat-based system. It was never going to be nice. It was never going to be great. It was never going to be easy. But you had that insurance of your gold position for this sort of situation. And I want to look at the fact that it is over. No matter what you think, it is over now. The world has permanently changed. The Fed is attempting to stop this repricing from going any further. They essentially announced they are nationalizing the markets. And he's looking at a headline from the FT, nationalization of bond markets helps calm nerves. Fed's promise of unlimited buying will not be enough on its own, says investors.
I mean, this is the culmination of what we've been talking about for a number of years here on the Keiser Report. For those of you just catching up now, this is what we've been warning about and talking about for years. So in other words, no price discovery is allowed, no risk borne by the financier allowed, no risk for the billionaire class, no possibility of losing a penny, as long as the central bank has committed to infinite money printing. Infinite, those are their words, infinite money printing. So that means that the stock market, the S&P 500, the bond market, is being taken private, okay? All those stocks and bonds will no longer be publicly traded or publicly listed, or the vast majority of them will no longer be. They'll be then, like Dell Computer. Remember, Michael Dell decided a few years ago, I hate being a public company, too much work, and my stock's terrible. I'm just going to go private. Well, okay, apply that now to the majority of the S&P 500. They're just going to go private. So what will be left is a vast penny stock-like junk bond market for idiots and casino operators to lose money in every single day for the benefit of the rentiers. Pretty much, that's the future. If you notice, the stock market is not going down, particularly at this very moment, as the flood of the wall of the tsunami of money flows into the pockets of the billionaires.
The bond market dwarfs the equity markets, the stock markets. So it's way vastly bigger. Ordinary people don't know the size of it, and the numbers wouldn't even make sense to them. But the fact that that is being nationalized, and presumably that's part also bailing out pension funds, the mutual market funds, like a whole sector of the economy that you're not even looking at. You're just looking at the shortage of toilet paper, the shortage of real goods and services. Like that's something that everybody can see. But the Wall Street knows that there's a shortage in the bond market. There's a crisis there, and nobody wants to hold it. This is what we've seen way back from September when the repo market was being intervened in by, well, now it's at $1 trillion a day.
Well, let's be clear about the term nationalized, because it doesn't refer to like a government, let's say France or the United Kingdom, taking over public transport and for the benefit of public, who will then bring in pricing that is in the public interest. This is American-style nationalism, where you have the Fed, which is a private bank owned by private bankers, lending out infinite amount of paper money so that the billionaires can be assured of never, ever taking a risk or losing any money. That's the American style of nationalism, is to go private. That's what they call nationalism. It's different than European nationalism.
Now it's the best of times and the worst of times in the gold market as well, as we've been covering. And I have a tweet here from Roy Sabag. The situation in the gold market has not improved. There is no metal, and bullion banks have now stopped offering two-way markets for gold. The spot price is disconnected and seems to be discovering the price for something that isn't gold. If you have gold to sell, contact us.
Right. Well, there's two parts to the financialization of the world and the increase in debt to many hundreds of trillions of dollars around the world, many hundreds of times GDP around the world, and that is the suppression of gold. We started doing all this content business back when GATA, the Gold Antitrust Action Committee, in the early 2000s, issued a report on gold suppression. This is one of the first things we covered. And this has been the story since that early 2000 period. Gold and silver have not been allowed to express their market price. There's been no true price discovery because you can't have a financialization going on rampant with hundreds of trillions of dollars worth of worthless debt and paper money without suppressing the price of gold. Now we're at the point where the fiat money is starting to finally hit the buffers, and so gold is allowed to be valued in the true price discovery as the COMEX and the LBMA collapse, as they did in the early 60s during the gold pool days. That means you're going to see, I believe, in my opinion, price of gold currently in the $1,300, $1,400, $1,500 range, $1,600 range will gap open to $2,500 and head over to $5,000 to make up for all that lost time.
You're seeing a demand for physical. People want physical gold. These investors, these multi-billionaires want gold. Nation states, central banks want gold. And that's what you're seeing, this shortage of the gold supply. The paper markets are unable to deliver physical gold. That's what we're seeing with these exchange for physical contracts being broken. On the other hand, also what you're saying about what they've been able to do, or what they've done since the 1980s for sure, is that there's, since the Plaza Accord and all this sort of stuff, that you need to maintain faith in the fiat currency, right, for this whole system to survive as it is. This is the worst of times for that fiat system. It's not coming back. They all think it's coming back. It's not coming back for them, because what you're seeing with this desire for physical gold is not just speculative exposure to the price, because that's where you go in the paper markets. You want the actual thing, because you are starting to lose faith in the fiat system. And I notice ordinary people are starting to question this as well, not by necessarily buying gold, but if you've noticed on Twitter, a lot of people have noticed, since we're printing up trillions of dollars all over the world, every government is printing euros or pounds or dollars, is they're saying, well, why do we have to pay taxes anyway? And as you and I have pointed out here, the taxes are just in order to maintain people's belief that there's some value in it. Like, I have to work, I have to pay these taxes. That means the government really thinks these are valuable. And well, if they were just printing it up, you would not have faith in the currency. So again, everybody's called for hyperinflation. It's been the widow maker of trades for decades, since 1971, essentially. But it could happen. It could happen, and when it does, it'll happen suddenly. It's gradually happening, but then it'll suddenly happen.
Right. I think you're already starting to see this in things like orange juice prices. So orange juice prices, due to the pandemic, which is caused in part by the proliferation of paper money in the absence of gold price discovery, is now skyrocketing in price due to shortages because it's a physical thing. And people say, oh, I need my health, I want my orange juice. Well, the price is now skyrocketing. Same thing is happening on the commodities, and the same thing is happening with gold and silver. Remember, billionaires think of gold and silver the way the unemployed people think about toilet paper.
Yeah, you've said this, and you said that a few episodes ago, you did warn that what would happen is just as you see people stampeding to the supermarket to buy toilet paper, you still can't, 2 weeks later, you cannot get any on Amazon. There's a shortage of toilet paper, and you can't find a roll for any price. You said the same thing would happen with gold, that once you needed it, it wouldn't be there for you. And you see that in this tweet related to the gold market as well from Holger Schweitzbitz. Gold market is facing unprecedented turmoil. Worldwide panic over coronavirus outbreak and flood of stimulus by central banks has ignited demand for one of humanity's oldest methods of storing wealth. It's suddenly much harder to get metal when it's needed.
Right. I predict the ultimate, and this is not only the ultimate use case, but the ultimate irony, is that once people realize they cannot get gold, they'll start flocking en masse into Bitcoin, because that'll be the only way they can protect their wealth with a reliable store of value. And that's so funny because everyone in the gold community and the Bitcoin community have been warring back and forth for years. Ultimately, the ultimate use case for Bitcoin is when no gold is available at any price, because there's simply the billionaires have scarfed it all up.
Unlike 2008, when gold prices did decline by 30%, as everybody sold off all they had in order to meet their margin calls. We saw that briefly. But unique about this situation of the pandemic is that many mines are actually having to shut down. So you're going to have a serious shortage of supply. The refiners, as you mentioned, in Switzerland are also shut down. So we could be encountering a real crisis in the gold markets, just like in the toilet paper markets.
Right, mines are shutting down, supplies drying up. As you point, the key is that when you need it most, it won't be there. That's why people like myself and others in the gold community have always been saying, you can't wait for that. People always say, when's it going to move? When's it going to move? Well, it's better to be a year too early than a day too late, because once you're too late, you're too late. The door is shut, you're out. Hey, you know what? Speaking of great books for the pandemic, you like Charles Dickens, here's a good one from our bookshelves here. Albert Camus, The Plague, right? This is a classic. This is really, detailing all the emotional turmoil that goes with the pandemics, as it were. It's not new. It's happened before. Anyway, we got to take a break. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to journalist, author, podcaster Matt Taibbi. His podcast is called Useful Idiots, not to be confused, of course, with the useless idiots who have once again destroyed our economy and financial system. Matt, welcome back.
How's it going, Max?
Fabulous. Matt Taibbi. Now,
okay.
Nobody captured the 2008 financial crash zeitgeist better than you with your talking about Goldman Sachs as a vampire squid. Have you come up with a similar metaphor for the 2020 pandemic collapse yet?
I have not. I have to go into the metaphor factory for this one. Honestly, this whole thing is, the size of it is so hard to get your head wrapped around that just conceptually, I just don't really have a firm grasp on what's happening here. I mean, clearly this is going to end up dwarfing 2008. In so many different directions, and including with the bailout package. So it's really hard to have a line on it yet.
Well, in a lot of ways, it's a continuation of 2008. It's part 2 of 2008, because as you documented in your work at that time, the solution at that time was to simply give the guys who did the bad things more money to do more bad things. So here we are in 2020, and suddenly the outcome is much worse. Now, the U.S. spends 18% of their GDP on health care, and yet health care and health workers in the top hospitals in New York City are wearing garbage bags for medical gowns, What does that tell us?
Well, obviously, we have a healthcare system that's completely inefficient, and it's based on a series of incentives that don't really make sense in terms of if your aim is to provide good and efficient healthcare to everybody. That's really not what our healthcare system is designed to do. It's designed to drive profits to a few people in a few industries, pharmaceutical, insurance industries mainly, and hospitals as well. But one of the things we're finding out with this crisis is that there's just a mismatched set of incentives for just providing basic care. So, for instance, hospitals are going to get killed through this whole affair because just putting a sick person in a bed for 7 to 10 days and putting them on a ventilator is not a money-making activity for them. So even though they're going to be overwhelmed, they're going to be busier than ever, they're actually going to lose cash. They're going to forego elective surgeries. They're not going to be doing the more serious surgeries that make their big money. The supplies of things like masks and gowns, there are rules for how you maintain the inventory of those that have prevented them from having stockpiles. So all of this is exposing profound flaws in how we structure our healthcare.
Now, back in 2008, there was the TARP money. It was $750 billion or so, and then that metastasized and became many trillions of dollars. This 2020 repeat of the 2008 crisis has started off with a $6 trillion bailout. I'm sure that'll balloon to much bigger numbers in the months that follow. The vast majority goes to the same bankers, private equity, corporations that wreck the economy. Steve Mnuchin's been granted enormous powers over trillions to be dispensed to banks and corporations. Another daylight robbery in the works. But this is, again, it's a repeat of 2008, but just 10, 20 times bigger. And it doesn't seem like there's anything in place that would put any brakes on this at all, Matt.
No, there won't be. And I think the difference with this, as opposed to 2008, is that in 2008 there wasn't a predicate event that the public could look at and say this organically caused a financial crisis. I mean, if anybody bothered to actually look, they would find that the 2008 crash was caused by a lengthy period of gambling in the mortgage markets, particularly the subprime mortgage markets, and they would be able to draw a direct line between that and the people who were the companies that were most in crisis and ended up receiving most of the aid. In this case, I think it's going to be very, very hard to train public eyes on the financial disaster and see and have them be upset in the same way as they ultimately were after 2008, because people are going to say this is an organic, natural disaster that we just had to deal with one way or the other, and they're going to ignore the enormous profiteering that's going to go on because they're going to see it as a rational response to a real crisis.
Now, leading up the years up to this crisis, airlines. This is one thing, though, that people are really starting to figure out, Matt, is that the airlines spend, and other companies, 96% of their cash flow on these stock buybacks. Boeing spent $100 billion on buybacks. Now they're getting bailed out. So there's a direct cause and effect here. The airlines spent all of their free cash flow goosing their own stock and essentially transferring that wealth to the executives. Now when they need the cash, they don't have it, and they go for a bailout. And this is being understood by the public now. They understand this, that there was a wholesale thievery going on in these industries, including particularly in the airline industry. Another meme that's gaining enormous traction is the central banks go brr or brr. You know, they're trying to inflate the market by printing money. So there's a meme of a pink Wojak psychotic guy printing money quickly to keep the market. So there is a connection. People do see the connection now between artificial money printing and the facade of a functioning market. So I think the public seems to be catching on, Matt. I mean, you're got your finger on the pulse over there at the Rolling Stone. Am I wrong?
What they'll eventually see is that there were serious flaws in the economy. Obviously, what you're talking about we've had this artificially overheated stock market, this economy that's been based on all these rosy numbers that are continually reported coming out of Wall Street. But as you point out, it was really a party that the executives of these publicly traded companies were throwing for themselves, and they were just piling more and more cash into their own share prices in order to personally profit. So when this happens, it's not like we just said, hey, that's not a healthy way to structure the economy, and that's not the best way to equitably distribute resources and invest and grow and all these things. No, the response was just, let's just throw a bunch of money at the stock market so it keeps going in that direction, and then we can keep this party going. And you're right, there's absolutely a correlation in that sense, because that's exactly what happened in 2008. Similarly, with the money printing, of course, we had more or less exactly the same situation in 2008 with, their various quantitative easing programs. So yeah, it's the same. I just think the public, it's going to take them one extra step to get there, to get to the outrage, just because of the coronavirus thing, that people are going to say, well, hey, it's a real problem.
Let's turn to politics, because I know you've been writing a lot and tweeting a lot about this upcoming 2020 race, because it's got some fantastic cast of characters and some real drama developing here. On the Democratic side, we've got Joe Biden, who there seems to be some questions surrounding what's going on in that camp. If you look at Twitter, apparently the American voters, there's still a lot of support of the way Trump's handling the coronavirus pandemic. But what's your take here? It looks like the Democrats might be underestimating Trump again. But how do you see what's happening here?
It's such a repeat of 2016. I covered Trump's campaign in 2016, and right from the start, one of the things I noticed was there was a gap between how Trump was perceived by people like me in the media, who worked in New York, LA, and Washington, and how he was being perceived by people in the rest of the country, by the bulk of voters, and particularly by the bulk of conservative and independent voters. So Trump, the more he was exposed to people, the more people actually liked him. I mean, when he went out in the campaign trail, they loved going to his rallies. He got enormous amounts of enthusiasm. But the press and the political class continually registered this as some kind of error, like it wasn't real. They thought that there was eventually going to be some kind of correction. The more they wrote about him, the more they complained about him on television. And it didn't happen. Like the more Trump got out in front of voters, the better he did ultimately, and the more condemnation he got from people in New York, LA, and Washington, the more people seem to like him. And that's what we're seeing now, again, with this coronavirus thing and with this election cycle. There's been this assumption that as soon as we get somebody who's superficially not a lunatic, that person is automatically going to win this enormous amount of support. But no, like, again, even in this crisis, Trump's approval rating goes up. His approval rating during the impeachment hearings went up. During Russiagate, it went up. And it's the same miscalculation that the same people are making. It just boggles my mind that they think that there's going to be a different outcome this time.
Well, in 2016 and leading up to 2020, there seems to be the dead hand of Hillary Clinton in play, right? I mean, whatever happens is that, she denied Bernie 2016. The DNC, of which apparently she still has influence, has maneuvered Bernie out through a lot of dirty tricks. And now with Biden, it looks like a straw man to somehow maybe parachute Hillary in at the last minute to save the day. And is that the reason Trump gained so much popularity, is because people see through the machinations of Hillary Clinton?
Well, whether it's Hillary personally or just the party as backed by Hillary and all of the Clinton acolytes, yeah, it's those people. I don't know that there's actually a plan to replace Joe Biden with somebody like Hillary or Andrew Cuomo. That's the popular conspiracy theory lately. but certainly they think that their formula, that formula of politics is going to somehow prevail this time around, and they're just wrong. They don't understand how that there's a ceiling there for how much support that brand of politics can get with this electorate, and they also don't understand that there's an enormous level of anger and frustration and just outright dislike of that brand of politics out there. They're not sensitive to it. They think actually that they're liked much more than they are. And it's just frustrating to watch. Like the thing with Bernie Sanders, I think he's a flawed candidate. I love Bernie. I've known him forever, and I've written a lot about him over the years. He does have his flaws, but the reason he was interesting as a candidate is because he presented a different kind of politics, something that was substantively different from what they ran last time. And I think it would have had a better chance with independents and with other kinds of voters. But no, they want to go back and just run it back, and they think it's going to be different. I don't understand.
Right. Okay. Well, nice to speak with you again, Matt Taibbi. Hope to talk to you again soon.
Absolutely, Max. Hang in there.
Will do. Well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Matt Taibbi, star, writer of the Rolling Stone. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.